The public and private markets are blurring as well. Robinhood, a company that some of you might know, announced yesterday they're going to launch a public venture capital fund that's going to offer private companies as securities. So think about it, a public venture capital fund where you can invest in private companies, kind of like an oxymoron, but they're offering that. The president just passed an executive order in August that says retail investors, 401k investors, can now invest in private companies.
It seems like every day there's a new, traditional asset manager getting into private markets, whether it's Goldman through, T. Rowe and KKR.
Yeah. There are really, usually different asset classes, different return profiles, different return expectations within the private markets versus the public markets. The blending of the two is going to be interesting to see how that plays out over time. Your earlier comment, probably one of the more interesting dynamics that we've seen for pre-IPO companies is the number of closed-end funds that have looked at tapping into the private equity ecosystem to try to satisfy some of the demand for retail investors that want to have access to companies that are private, that have been private for a very long period of time, that haven't gone to the public markets. And so I think that trend is going to continue, and that's very much what Robinhood is trying to tap into as well.
And that's where we get back to liquidity and the access to liquidity, particularly for retail investors. There's a kind of late cycle phenomenon of going for retail, particularly, and it's not all cynical though. And so I think we got to be a little careful here about celebrating the triumph of creating access, particularly to illiquid investments, for investors who are not institutions, who are not perpetual endowments. And those, of course, are under pressure too. So it's not, I think it's a very uncertain time for market structure